Welcome back to SBJ Academy. Today we are starting with an interesting chapter, Bank Reconciliation Statement. Everybody is very confused with the reconciliation statement, how to prepare Bank Reconciliation Statement and what are the reasons for preparing the statement. So many comments I am receiving regarding the statement, regarding the Bank Reconciliation Statement. What is Bank Reconciliation Statement? Bank Reconciliation Statement is a statement prepared for reconciling the difference between cash book and bank book. Then what is the need of reconciliation statement? The reason for reconciliation statement is, one is timing difference. The second is differences caused by errors. What are the timing differences? What are the reasons for timing difference? Before going to the differences, we can see how it will occur. As we are a businessman, we got a check from a customer, a debtor. As and when we received the check, we recorded, or when we are depositing the check to the bank, we will record in our books of accounts. What will be the entry? Bank account debtor to debtor. Bank account debtor to customer or debtor. We deposit the check into bank. In normal cases, it will take 2 or 3 days to clear a check. What are the types of checks? 2 types of checks are there. One is bearer check and another one is crossed check. What is bearer check? A check we can encash from the counter. Go to the drawer bank, give the check at the cash counter, we can encash. If it is a bearer check. Then what is crossed check? Crossing means putting 2 parallel transverse lines on the left hand top corner of the face of the check with or without the name account payee or not negotiable. That means crossing. If the check is crossed, we cannot encash it from the drawer bank counter. We have to deposit that check into our bank. When we are depositing that check into our bank, in normal course it will take 2 or 3 days for collection. After 2 or 3 days, it may be credited to our account or may be dishonored. See this incident. When we are depositing the check, we have recorded in our books of account. As per our books of account, bank balance is increased. But as per the bank, the check is still under clearing. The amount not credited to our account. Here, as per our cash book, bank balance is increased. But as per the bank book, our bank balance is less. Suppose if the check amount is 1 lakh, our existing bank balance as per cash book is increased by 1 lakh. But as per bank book, bankers record that balance is as old before presenting the check. In this case, cash book balance is increased by 1 lakh, passbook balance is decreased by 1 lakh. This is the first reason for timing difference. Check deposited but not collected. Check deposited but not yet cleared or collected. The matter is very simple. It is depending on the logic. Now see, our cash book balance is increased. Passbook balance is decreased. Before going to prepare the reconciliation statement, we have to consider either cash book balance as the base value or passbook is the base value. If we are considering the cash book as the base value, it is called reconsider. If the passbook balance is considered as the base value, it will be the reconsider. Now we are using the word reconsider. We are using cash book is the reconsider as the main balance. What will happen? Cash book balance is increased, passbook balance is decreased. For equalizing the cash book balance with the passbook balance, what we have to do? Less the 1 lakh rupees from the cash book. So this is the first treatment of check deposited into bank but not cleared. If the reconciler is cash book, we have to deduct that amount from the cash book balance. Now it will be equal. Cash book balance and passbook balance will be equal. What is the second reason? Suppose we have issued a check to one of our creditor. 50,000 rupees. As and when we issued the check to the creditor, we will record that payment in our books of account. What will be the entry? Creditor account debtor 50,000 to bank 50,000. The creditor can present the check in his bank or deposit that check into his bank account at any time. That is his convenience. We cannot expect when he will deposit the check. He may be immediately deposit check or maybe deposit after 1 day, 2 days, after 1 month. That we don't know. But as and when we issued the check, we have recorded that payment in our books of account, our cash book. But the check is not coming to the bank for payment. From our bank account, it is not debited. This is the second difference. Check issued but not presented for payment. Now see this reason. What will be the effect in our books of account? When we are issued the check, we recorded in cash book. So as per the cash book, bank balance is decreased. But it is not coming to the bank for payment. Bank balance is increased by that amount. If the cash book is the main or reconciler, what we have to do to equalize with the bank book? In cash book, we have to add it. Then it will equal to the passbook. So when a check is issued but not presented for payment, if the cash book is the main balance or reconciler, we have to add that amount in our reconciliation. The next reason is, suppose bank may charge expenses, bank charges, monthly charges or quarterly charges that they will take as bank charge, folio charges like that. If the bank is charged anything like that, how can we know this fact? We don't know. We can understand that information only after updating our statement of account or passbook. So, as and when we update the passbook, our cash book and bank passbook will show a difference. This is the third reason for the timing difference. Bank charges debited by the bank. What will be the effect? As per our cash book, the bank balance will be increased by that amount. As per the passbook, they have debited the amount, the bank have debited the amount from our account. The passbook balance may be decreased by that amount. If the cash book is the main or reconciler, what we should do? Cash book balance is greater, so we can less the amount in cash book. So the next timing difference is bank charges debited by bank. In such a situation, if the cash book is the main balance or reconciler, we have to less that amount in our reconciliation. Then it will be equal to the passbook. The next one is, suppose we have a customer in a remote area, in another stage. Nowadays, everybody is sending NEFT and RTGS facility. Nowadays, everybody is using NEFT and RTGS facility, IMBS, everything. Suppose one debtor from another stage has transferred the amount to our account by NEFT. If that debtor not informed the credit transfer, we cannot understand that transaction has taken place. So, when that amount is credited to the bank, our bank balance is increased and we don't know that fact, our cash book balance is decreased by that amount. This is the fourth reason. Direct deposit by the customer. Any customer or debtor directly deposited or transferred his amount to our bank account. In that time, our bank balance will be increased by that amount and our cash book balance may be decreased by that amount because we didn't record that transaction in our cash book. What we should do? Cash book balance is less, passbook balance is higher. In order to reconcile the balance, cash book is the main balance and cash book is the reconciler. We have to add that amount in cash book. Now it will be equal. So when a customer directly deposited the amount into bank, if the cash book is the main or reconciler, we have to add in our bank reconciliation statement. Now let's see next one. Suppose the bank has given interest on our deposits. If the account is a savings bank account, bank can give interest. Or if the bank have collected any interest or dividends on behalf of us, at that time also we didn't get any information regarding this credit. So at that time as per the passbook or bank record, the balance is increased. We didn't record that transaction in our cash book. Our cash book balance is decreased by that amount. What will the effect? Cash book balance is less, passbook balance is higher. If the cash book is our reconcilier, we have to add that amount to the cash book, then it will be equal. So, interest or dividends directly collected by the bank can be added in our reconciliation statement if the reconcilier is cash book. In the same way, if the bank have given any payment on behalf of us, maybe chances are there. Suppose we have given any standing instructions to make the payment in time, automatically the bank will transfer that amount to that person or that company. In such a case, when it is automatically debited or transferred from our bank account, the bank balance is decreased. We didn't get the information from the bank. At that time, our cash book balance is increased, that much amount. Now, the passbook balance is decreased, cash book balance is increased. What we should do? Cash book is the reconcilier, cash book is the main. We can reduce the balance in the cash account, it will be equal to the bank passbook. So, in the case of payments directly made by the bank, we have to deduct that amount in our cash book balance if the reconcilier is cash book. Now it will be equal. Suppose the first time we have seen a customer, a debtor have given a check to us. We have deposited that check to the bank and we are waiting for its clearance. It will take 2 or 3 days. When we are depositing the check into the bank, we have recorded in our books of account. Our cash book is increased by that amount. It is not credited by the bank, so the bank balance is decreased by that amount. If the check is dishonored, what will happen? On the second day, if the check is returned dishonored, what will happen? The same will be there because the bank hasn't credited that amount to our account. So, if the deposited check is dishonored, as and when we get the information from the bank as a dishonor, our cash book balance will higher than the passbook balance. Cash book balance is higher, passbook balance is lower. What we should do? When the check is dishonored, we have to reverse that entry. So our cash book balance will come down to equal to passbook. These are the 7 timing differences. That word is very important. The main all these reasons are only due to timing differences. A check is deposited, we have to wait for 2 or 3 days. This is the timing difference. After 2 or 3 days, our bank balance will be equal to our cash book balance because that check is cleared. Here, we are preparing the bank reconciliation statement on a particular date. When we are preparing the statement as on today, we are looking on what happened on this day, whether that check is cleared or not, or that issued check is coming to bank for payment. Sometimes today's reconciliation may be changed by tomorrow. So this reconciliation statement is prepared only for a 1 day. This is called the timing difference. On that particular day, we are finding what are the reasons for the difference and we are analyzing the reason and we will decide whether it should add or we should deduct from the reconciliation. So these are the timing differences. Then what are the difference caused by errors? The difference is 2 types. One is timing difference. That timing difference everything we have seen. The second chance is errors committed by our organization or by the bank. What will happen? When we are depositing a check, we have omitted to record. As and when we deposit the check into the bank, first we have to record in our books of account, then only we have to transfer it into bank for collection. But we forgot to record that transaction, that deposit in our books of account. Bank has collected the check after 3 days. Now what will happen? Passbook balance is increased by that amount. Our cash book balance is decreased by that amount because that is not recorded by us. This is the one reason for error. And another one, suppose when the bank has credited the amount, they have credited that amount to another customer account. By mistake, they have credited that check to another customer account, another person account, what will happen? When we are depositing the check into our bank, we have recorded in our books of account. But when the check is collected by the bank, when the check is cleared, the bank has credited that amount to another person by mistake. At that time, our cash book balance will be increased by that amount, and the passbook balance may be decreased by that amount because that amount is not credited to our account. So this is the second reason. And another reason may be when we are depositing a check or issuing a check, we have wrongly entered the amount. Suppose if the given check, we have issued one check for 1 lakh. When we are recording that check payment in our books as payments, we have recorded it as 10,000. 10 we have omitted. What will happen? 90,000 will differ. Our cash book balance is increased by 90,000 because the check is 1 lakh, but we have by mistake we have recorded it as 10,000. So the cash book will be increased by 90,000. When that check is cleared by the bank, 1 lakh has gone away from the bank. So our cash book balance is deducted by 10,000 and bank balance is deducted by 1 lakh. 90,000 is the difference. So, and these are the errors caused for reconciliation statement. So we have seen what is bank reconciliation statement and what are the reasons for reconciliation statements. First reason is timing difference. Second reason is errors. On the timing difference, we have seen 7 situations and reasons for errors 3 or 4 reasons we have seen. Then what is the format of the bank reconciliation? The format is particulars amount. The title will be Bank Reconciliation Statement as on. That is a very important word. Bank Reconciliation Statement as on. If we are preparing it on 31st March, we can write as Bank Reconciliation Statement as on 31st March 2020 because this statement is prepared only for that day. It will be differ from the 30th of March and it will differ from 1st of April. So that reconciliation statement is only for that particular day. So the title will be Bank Reconciliation Statement as on 31st March 2020 of. We can write the name of the organization. Particulars amount. If we have more than adding figures and deducting figures, we can add one more column in the inside as the amount. Use the outer column as the total. Because if you have more than additions, everything we can add first and we can show the amount in the inner column. That total can be taken to the outside. That can be added with the reconcilier figure. Then show the deducting figures. That's also we can narrate the reasons. Show the figures in the inner column. Take the total to the outer column. Less from the total amount we have received. The difference will be, the final amount will be as per the cash book balance or as per the passbook balance. So in the next class, we can do a problem. Cash book is as the reconciler. Now we have seen everything as cash book as the reconciler. If the passbook is the reconciler, what will happen? That we can see in the next class. First of all, we can complete the reconciler as cash. After completing, we can go to reconciler as per passbook. So, if you are the first time viewer, kindly like, share and subscribe my channel. You will get all the important classes day by day because this is a class of regular nature, not as a one-time class. Every day I will upload the classes and it will be as a regular class. It is a continuing class. So if you are the first time viewer, please subscribe it. You will get all important notifications right time. In the future, after completing the reconciliation statement, you have to complete single entry system, bill of exchange, financial statements, trial balance and errors and everything. That everything will be in order only. So we can meet on the next class. Bye.